Alright guys, so in this video, I'm going to talk about why I use AMC's volatility windows to uh, potentially experience a volatility event. It's a pretty simple thing to calculate, and as many of you know, the 62-day cycle has been something we've been tracking here for quite some time, ever since the channel started. So I just want to talk about why I believe this works, and yeah, why it's valid. So here are the volatility windows. They're 13 days long. Okay, and this is where we experience volume, heavy volume coming in. So it can be extreme volume to the upside or downside. Now, this doesn't mean that every single time we get there, we experience heavy volume. It just means that that is where we have experienced heavy volume before. And right now, the correlation is 5 for 5. Now, how do I get that number, 5 for 5? Okay, well, we have an indicator here. Okay, it measures the percent change over a set period of time. Okay, so this is an ROC indicator. And the parameters are set according to that 13-day window. Okay, so bars to compare, 13 days, and we're looking at the entire chart here. So it's pretty clear that in the cycle, we wait 2 months, and this indicator is telling us that in that 13-day window, we experience right around a 70% to 100% on average increase in price. Okay, and you can see that here, no other zone has experienced that before. So all of these, they clock over that 75% level. Okay, especially January and June. Those have been the biggest ones. Okay, so this is why this is it has that positive correlation, because inside these windows we have experienced at least 75%. Now, this is an average, so all of these that you're looking at actually experienced over 100% return on these windows, but because it's set to that 13 bars to compare, is going to smooth it out. So nowhere else are we looking at that same percent change. Now, on some of these other windows, the ones that you're looking at that are red, those are inverse. So what that means is that the price is actually coming down. It's literally, the algorithm is flipping it, right? So in this algorithm, and this is the sequence that we have going on right now, in this algorithm right now, we've only experienced 2 that have been flat. What that means is that there has not been volatility inside these zones. Okay, so, and you can see that with the indicator down here as well. So for these, there's volatility on all of them, 3. You can see it down here. Now it doesn't extend the same way, because with percent change, you can only go down 99%. You can go up, infinity. So that's not going to display the same way down here, but you can clearly see it on the charts. These are all pointing down. And something that I found interesting here in this sequence, and why I've said over and over again that, in these periods where, not much happens on AMC, it really is just being patient and waiting for the next volatility zone. That's how I've treated this for the past 2 years. This drastic push down to the levels that we're currently trading at. I've been waiting and waiting and waiting, right? Because these volatility zones have shown that there is high correlation in this, the volume that we experience. Okay, so now that I kind of got that out of the way, explained it, how I validate this and how it makes sense, you can clearly see it on the indicator. And there's many other tools you can use to validate this. This is just one of many. Now, the correlation here that I've been looking at, this is where it gets interesting, guys. So watch this. Starting in January, that was the biggest point of interest, we call it the volatility window, that we've had. You can see that on this 13-day average, we peaked at around 800%. So it went way higher than that, but that's the average. Okay, so from that point on, this is where we're going to start the correlation here. So the correlation is one positive cycle inverse. We're going to call these inverse, even if they're just sideways. We have another positive one, and then we have 4 inverse. Okay, so 1, 0, 1, 0, 0, 0, 0. What do we have going on right here? 1, 0, 1, 0, 0, 0, 0. So same cycle. Okay, the one in November, that is what I call the initial push. It's almost like the projector that set things off to launch, because that's where it all started. But the first and the largest volatility window here in percent change was the one in January. So starting from there, in this cycle, that seems to be the one that is following right now, this sequence. So we have the same thing. It's like if this was January all over again, think of it the same way, right? This goes over a little bit more, and it comes down a little bit, and then you have this, pretty long just drought where AMC is just trading along this very small range. And it's almost been a year of it just doing that. So obviously, and that's the goal here that these shorts are trying to do, is just exhaust the retail trader, and it makes sense. I'll tell you guys why it makes sense. It's in the market, market makers, they know that they have to hedge for positions, and they're giving the opportunity as market makers, and also just institutional owners in the way that the market functions. The majority of people are going to buy a stock. They're not going to short a stock because it's not accessible to everyone. So most of the time, people are going to be bullish just in the markets, and that's where the opportunity is for most retail traders. It's just buying the stock. Now, there's that doesn't mean you can't short a stock. It just means that the majority of people will buy stock. So what does that mean? It means that these guys, they have all the time in the world to do this and to run this algorithm here. So once things pump, they pump very quickly. I mean, just think about it this way, guys. I mean, it's a very small window, 13 days. That's it. And in that 13-day window, here in June, things pumped in like 3 days. So 3 days is quick. Now, on the macro picture, 3 days inside of 3 years is very small. So once these guys pump it, what happens after that? You pump a stock, and now you have all this time to short it. And it's just up and down, up and down, up and down, until you get down to these very small numbers. So we're trading in these very small numbers now. And you do have to ask yourself, well, now that we're trading down here, what's going to happen next? What does that mean? Well, just like these algorithms run and are orchestrated to run a certain way, there has to be a breather. There has to be some upside coming next. And this is where you look at the entire chart. You look at technicals, you look at everything else. We look at what other cycles are doing and compare that and see where we are in this correlation. I talked about Bitcoin on the last video, and we have that same sequence right now playing out where things are falling in the crypto market, okay? And prior to that here, we were actually trading around May. Okay, so a lot of things in the market right now are happening the same way. We're in the same cycle. So coming up to the next point of interest here, we're going to call it a volatility window, because I don't want to confuse anyone. Dave actually said something on Twitter, and it did get me thinking. I don't want to confuse anybody when I say these points of interest are, they're just potential volatility zones where we could potentially experience volume, right? Heavy volume. But it's not guaranteed that we experience heavy volume in that window, as we've seen on these last 4 points of interest here, where it's just been flat, nothing's happening. Okay, so the next one here is in June. What I'm going to do, we're going to clone one of these. Okay, and the next one is right here. Pull up the cycle. Look at that, I got it right there. Starts May 30, June 3rd. It extends all the way up to June 23rd. Now, do I think it's going to look like this? No. I've said this before, and I think that even though you play the same cycle, you have to look at it from a different ratio. So things don't happen and go up the same way as we've experienced. Okay? Let me take some of these away. So us being in this POI here, let me go on the daily again. Okay, again, this is just an opportunity. I've actually laid out a projection on what I think is going to happen, but going on the way up here, we have to be on track, and we have to this thing has to be putting pressure on the shorts on the way up. That's how shorts get squeezed out, right? The pressure builds up. On GME's chart, it was very clear that there was you can call it like almost an inverse wedge, parabolic arc developing until things just popped. And that's the same thing that needs to happen here. We're dealing with this macro double bottom right now. That could be also a cup. And you're starting to see things turn around. Like right now, things are bearish, right? We have AMC coming back down. But as long as things sustain themselves, you can see this, like, dude, the chart does not look terrible. It looks pretty good to me. And, considering the market conditions and everything that's going on right now, I don't see why, like, AMC has not been beat the same way as we've seen with these other stocks, right? Bed Bath & Beyond, Nikola, okay? Even, like, the cannabis stocks and all these other ones, man, got beat down pretty hard, okay? We got Mullen, everything going to the pennies. AMC is sustaining itself, and Ape too. Right now, $5, dude. They have not brought this down below that level, so that's very important that we stay on that range and we start climbing up here. Okay, so my next projection, and this is like pretty conservative, I think, but going into the next point of interest, if we experience heavy volume coming in, I don't see why we can't see anywhere between, and I'm just going to have a range here on where it goes from where it starts, but right around the $6 range, if we're there before the POI starts, I don't see why AMC can't go to the $8 or $10 range to start coming back up and meeting some levels of resistance. Once we get there, this is the first point of interest, okay? The next one after that is in August. Now, the cycle does not have to follow back-to-back the same way. Like, we don't have to do, positive POI, inverse, and then positive again. It could be positive, positive, like we had back here. Okay, these were both positive POIs in a row. And that looks good to me on the chart. This is where we zoom out. Okay, on the weekly chart. And you start to see the, AMC's macro picture here. It's just what we call a massive projector pattern, which, we started to see this way back in June. It's been a while. But the more you zoom out, sometimes charts do extend themselves a little bit more. And, this would be nothing if it was on the daily chart or if it was on the, smaller time frames. But the fact that we're on the weekly chart, even the monthly chart, this is starting to look pretty good. Okay. Starting to look like it wants to turn around, making slow steps on the upside because things won't just go up. You do have to ride your way up, just like we did down here. We double bottomed, we came up, we came down, traded sideways, and then we came all the way up. We rode our way up there. Same thing right here. If we're at a double bottom, we got to ride our way up first, and then start climbing back up, right? And then here, based on fibs and everything and levels of resistance, for a positive point of interest going into August, so that volatility window in August, if things sustain themselves and climb up slowly up to that range, all right, and I gotta cut this video here, man, because we're going on 15 minutes. Look at that. All the information, guys. All this good information. Okay, so if we have a positive POI here from 6, I'm going to say 10. All right, anywhere in that range, then we're one step closer to going up to the $30 level. Like we've done this before here, and we were looking at the original chart. It went from 12 to 70, right? So that's pretty extreme. Even down here, guys, this was over 1,000%. So looking at something like this is not impossible. We've seen this before on AMC. We know how AMC works. So in this case, the one in August also peaks 23rd. I'd say something like this, going up to that 30 range. And I think this would be an ideal chart to look at. I've said this before also with quad witching. That's what we have, the same thing. It's how these guys are hedging for those positions, what options are available, what options are open. The leap curve, I mean, there's a lot of things I'm going to cover actually on the next video. But in this one, I just wanted to go over the volatility windows, and then on the next one, I'll go over everything else. So make sure you guys drop a like, share, and subscribe, all right? Also, if you have any questions, drop them in the comments, and I'll do my best to get on that when I do some live streams, all right? All right, guys, peace out. Take care. See you next time.